Mess with fire now. losing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been, you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Into the charts we go. Bada bing, bada boom. So on this linear regression trend to the downside, we had this, of the retrace, we had this nice equilibrium point that we've gotten the bounce off of for the past 2 days. I was kind of pointing out that if we get above a certain level, we could see an upside path of that to the upside here. Also, we are in the equilibrium point of between the 0.5 and the 382 of this pitch fan, of this mean reversion path to the upside. On this pitch fan, if you were to take us to the actual mean reversion of this path, it would take you all the way down to 19.6, but that's quite a ways away. Let's go into the high block capital liquidity pools to see where the liquidity lies. What is that? That's when people lock their liquidity in the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those stop losses lie. And let's go right into it with the 1 minute time frame. Please consider liking and subscribing if you have not before, because you can get this free of charge, which costs a pretty penny to see. So on this drop that we had earlier in the day, we did see some pinged liquidity. Was this earlier in the day? I think it was yesterday that we saw this 71 million, slightly more shorts pinged in than longs, and so we saw this gobble up of the 50x here on the, let's zoom in. So we saw a bunch of stacked longs down here, some 50x characters and 100x characters as well, all the way down to 2624. They grabbed those pools there and gobbled them, and at the same time pinged in some 100x, which they came back to grab without hesitation as well.
Fatality.
Yes, and that's what the market maker does, grabs the longs while they induce the shorts and come back to eat the shorts. And where is it that we're standing right now? Well, we are standing on the precipice. Well, we already got that guy just above the partner in crime at the 50x up here on the 1 minute time frame here at 2675, and it stands to reason that we could go higher up into the stacked pools up here with all the little bubbles over here to the left, up in the 2686 region. And if we clear all the 50x, then it's just a hop, skip, and a jump to the pools up at 27405. We did talk about the ramen noodles being stacked nicely up here with all the 50x and 25x up here in this region. In the 2786 region is where it starts to taper. So are we going to get a stab up into the upside? We said we kind of hoped for that to occur. So before we do that, let's go into the higher time frames and expand our vision to the higher time frames. Shout out to everyone here. What's up? What's up? As we go into the 7-day, the 7-day does have the imbalance to the upside here, all the way upwards of 28.2. You have about 30 billion plus up in this region that they could stab into. There's the yellow is in 3 billion, so you have these 3.5 times 10, so basically 30 plus billion up in that region in the imbalance on the 7-day time frame for it to come back to. And if you go to the monthly time frame does have some stuff down to 24k, but if the narrative is bullish, they do have liquidity up there in double digits as well. Let's go see the 3-month. 3-month has remained unchanged. We do have that 62 billion down to 25.2 we've been talking about. Are they going to come down and spawn the divergence off this liquidity or not? If we close a weekly candle beneath this level, then we would see a immediate stab and grab kind of deal to those time frames, because your bullish narrative would be lost as you make that higher or that lower high on the weekly time frame. So the weekly time frame is pivotal. This weekend will be the decision maker whether we go up into these regions or back down into these pools. On the 6-month time frame, you do have 100 billion down at 22.5. So on this 6-month time frame, the narrative does suggest you could come down into this, although you're getting a lot of hot liquidity spawned up here at 32.1 and above, and it's starting to increase over time, as you see in the last few days from 85 billion to 90 billion. You're starting to get this interest up in these pools just out of seeming reach on this 6-month time frame. So the pools are starting to build to the upside while you have these remaining down below. If we go to the yearly time frame, we had lost our previous range that we were drawing some liquidity pools from, so it's starting to fade, which is interesting because we can start to juxtapose that on the 2-year. Where did it fade and by how much? So if we go into here, we can see 159 billion at 32.4 and 100 billion dollars on this 2-year time frame. You do have large amounts located above all the way up into the 34.8 region. So the path to 35k is spawned off of this liquidity on the 2-year time frame. There is a justification to go up there. If we zoom into the minutia of where we are currently, we have 13 billion down at 26 even, 13 billion at 26.8. We have 31 billion at 28 even, and 46 billion at 28.8. We do have that 121 down here at 28.4 and another 148 at 24.4. So are we going to see another stab to the downside? The entire range up here, you have a lot of shorts up above as well. So we are discounting all of these pools up here. We've only been focused on these, but these are also marionette strings on these higher time frames, which do have large amounts of liquidity, which could be grabbed or at least closed out as they go higher. So if you total everything in this range, you do have large amounts of pools wanting it to go lower as opposed to going higher. I don't know if there's more down below here for us to look at, but this is what they offer us on the 2-year time frame. The highest amount here at 32.4 at $159 billion. If you go down here, we have 148, 121. Yeah, the current largest amount of liquidity is at 32.4, undeniably so. So are we going to start making our way up there at some point in time? Let's go into the charts and turn on our oscillators. Looks like we got a rejection of a few sell-off here. Let's go into Binance chart and see what's up. So we're getting a rejection off of the 236. This is the bearish trend-based fib level we talked about yesterday. If you cannot make it above this, if you make it above this, you could have a bullish narrative on. But if you get up to here and get rejected, this is the bearish trend-based fib level. We'll get into what that means right now before we throw on the oscillators. So what we did was, for the bearish trend-based fib level, we had basically added this impulse retrace idea here, and this retrace comes up to this point. So it tells you this 236 is where you would look for a short, and you have 1-2 hits, and we're starting to come back down. If you break this bullish trend-based fib level, then the pools are down to these regions. So if it's not one, it's the other, and if you're getting rejection out the 236 at 26,723, you could be coming down into these regions. Let's go ahead. It's been a long time since we've thrown this one on. Let's throw this on and see where the liquidity lies on the liquidation levels. It's the same kind of dealio as high block, but it's a free one. If you're ever looking for a free indicator, this is a liquidation levels version 2 by ML Applications. Please check it out if you have the time. And they could be coming down into these 100x pools down below here, as they clearly took out the 100x of shorts. It's pinged up pretty nicely on both sides. Looks pretty ambiguous, but they do like to come back to the 100x on both sides of the coin. All right, now it's time to turn on our oscillators. Let's turn on the heads-up display. What is this? This is Momentum Master. And we are getting 6 time frames overbought here, 5 time frames overbought here, and we're coming back to the 15-minute cloud. All right, so what is this? Link in the description for more, momentummaster.info. Scroll down to features, and you can look at each thing component. This is the cloud, the trend cloud we come back to after you thin. You kind of come back and kiss off of it. Are we going to get that order block on the 236 for the bullish idea? Let's go see what's into oscillator B. So you have the Williams starting to come down here on oscillator B. The MACD has crossed down below. You got ambiguousness on the money flow and the RSI. The stochastic could come in this London baton pass to New York, and it looks like it's a stop hunt rise drop idea. Second hit to the high. So when you get that first hit and the second hit, that's where you could have looked for a nice juicy scalp short. Is it a long time short or not? Let's go to the higher time frame, check it out. Let's make our ascent this time. We always make a descent in through the time frames. Let's start from the ground up. All right, so let's go into the 5 minute and see where that is. So the 5 minute is getting oversold here alongside the 15, making a rejection here, and the 15-minute could come down. You have an ABC coming down to the downside here, and so you could come out and take these lows. If you don't get support on the lows, you have another fair value gap to recover down here at 26,516. Let's see if that coincides nicely with anything over here. 26,516. 26,516. So they're coming back into these pools of 100x. They just don't like to let the 100x survive until they do. 26,516 would put you, yeah, right there at that 25 million character, which is now currently underwater. So they could come back to this small little baby pool of 100x down there while they recharge and look for an order block. That's a recovery of that fair value gap there. And let's make our ascent. So we already previously looked at the 15-minute cloud being in this upwards path. If you cannot hold this super trend, then the trend will flip to bearish. And this also coincides with the 236 bullish trend base fib level. We're currently coming down on the Williams and the stochastic RSI here, looking for a bounce idea on the 15 with the 5-minute coalescing with that. Hourly time frame is overbought, and you're looking with the baseline above the price, looking as this as fatigue. What are the baselines? Well, they are your first sign of reversal. When the baselines are above the price, this downside begins. So if you see these baselines above the price and starting to cross, then you could see this downside event down into this region off the cloud here. The cloud has shown some support here with the cross up event potential. The money flow is beneath the RSI though, so you could get a surge up for a double top potential at some point. We did have a large volume event of the PVSRA strategy. This one candle contained 200% of the previous 10 hours of volume inside this single candle. Same with this red one here. So we had 2 attempts to sell off volume, and this sell pressure turned into buyback pressure, which is extremely bullish. If you look at this in a wick to wick scenario in the direction it moved, and then you switch this to the basic idea, the 382, the body falls within the 382, which makes it a bullish hammer. Even though it's red, it doesn't matter. It has to do with the wicks and the 382 body, which shows this as bullish. So is this a double bottom event to the upside here, or are we getting just a simple retrace before we continue with an inverted head and shoulders out of here? This is what an inverted head and shoulders on this idea would look like. You have a shoulder, head, and possible shoulder out here. Shoulder, head, and shoulder. Is this going to give you your shoulder out of here? On this little miniature time frame, kiss off the cloud on the hourly. Hourly time frame is also coming down, but you aren't overbought on the Williams, and you're not at a really point where you would sharply reverse here. So this could just be a retest of the support to the upside here. If we go to the 4-hour time frame, 4-hour time frame still looks like it has some gas in the tank, and this could be a simple pierce of a cloud on the higher time frame as we make an ascent higher. The 4-hour time frame still has 1 hour and 14 minutes to close. However, if it closes in this bearish sentiment, let's just say what does it do? If it does that, we go in the direction of the momentum. Yeah, the 382 is bearish, so this is the opposite of this candle here. So if this maintains in this path, you could see a bearish candle rejection wick on this 236 bearish trend base fib level to the downside. We have broken the bullish trend base fib level, so we are just trying to see how this cloud and everything, the baselines here, hold on the 4-hour time frame as we make our ascent today rather than descent. And we're starting to see how the money flow had this previous hidden bearish divergence, which played out and got bought back here. So the buying back off the bearish divergence shows that there is some signs of life on the 4 hour. You're also reclaiming the cloud in a bullish sense, so this being beneath the price is supportive of an idea to continue higher, even though we are dropping here. If we can maintain that cloud and start to shift it in a manner similar to up here, but on the opposite fashion where it thins out and starts to turn blue, we could see this coming to the upside. So we could have some 4 hour support here on the hourly dump and the 15 reset. So the 15 reset with the hourly attempts at a dump could be staved off by the support of the 4 hour. Also, you have this passive support of the 6 hour, although we're getting rejected off of the cloud here. We had previously put this as a potential shift idea. It has moved slightly, but it is thinning, and the angle could be showing some sign of some sort of idea of coming up above it. Now you'd have to close a 6 hour candle in 3 hours in a fashion above this and start to see an idea where this closes and then comes back and retests and goes off of this. We talk about this multiple times about the retest off the cloud idea. So coming up above this and retesting the cloud, if it starts to thin, is where you would monitor the bullish narrative for that thing. If you look at the 6 hour, it's been steadily going up, not yet overbought. So this is your passive support. This is kind of hidden bullish, if I do say so myself. I've seen this in times past where the 6 hour just kind of stays there in a manner and doesn't get overbought and sends us up more. Where is that? Give me a second. So we had a situation, where was that? The steady rise of the 6 hour. It must have been another time frame that did that before, but I remember seeing this steady rise angle, and it used it as a support structure. So the 6 hour time frame is 3 hours and 11 minutes away. If the 6 hour time frame can maintain a bullish candle in a similar fashion to this, we did do a lot of wick whacking, ambiguously pinging liquidity on both sides, trying to get a sentiment, but maintaining this slow but steady rise. Money flow is getting above the RSI here, which shows a slight sign of fatigue, although it's starting to come down to kiss the 50 level and try to meet up with the RSI for a confirmation of sentiment. And the Williams is also slowly but steadily going up. You have a potential double bottom retrace idea on the Williams. Sometimes patterns start to form and you see those double bottom ideas on the Williams and continue to the upside on that. If we look to this, the baselines are also crossed up and holding throughout this entire path. So if you hold the baselines, then it all has to do with the close though. Can the close of this candle do something interesting? Let's go see what type of liquidity it's eating up right now. Currently knocked out those 3 pools of longs. So we went all the way down off to the 26,536 region, 32 million gone, 38 million and 28, over 100 million gone there on that drop on these 2-3 candles that were opening up into the rise there. Coming back to that 26,516 we talked about earlier by the looks of it. So 6 hour time frame could close out bearish in 3 hours. I'd look for that 3 hour candle close idea above the cloud if we can make it above the cloud. The 12 hour cloud is our next step in the reclamation. If you were to make it up to the cloud, you'd pierce it and get rejected most likely and come back which is why this cloud idea is here. The angle is turning ever so slightly in a bullish manner, but still I guess it's thinned out ever so slightly if you compare this one, this thickness to this thickness, but still quite thick. So even if we got up to here, it would most likely take some time to pierce through it. If we go to the, whoops, I think we're jumping the gun. Let's look at oscillator B real quick. Oscillator B also doing the same thing as the 6 hour, acting ambiguous, not quite overbought, not quite there just yet. Could see the rise up here doing some meandering around, acting ambiguous. The money flow is beneath the RSI, which is nice to see for a long idea. If we get bought up on that, we have yet to see the cross up event on the 12 hour. This is piquing my interest, ladies and gentlemen. You're having this baselines beneath the price getting ready to cross. Now if this goes up and these cross and it closes a 12-hour time frame above this 236 level, then you are on for a cross up event potential on the 12-hour time frame. The last time we had that, let's just go back and see what happened when that happened. So we had this happen on Friday, May 26th, and it crossed up. And what did it do? This wasn't even above this was in a similar position beneath the cloud, and this cloud was thicker. And what did we see happen? We saw a huge 7% rise from that cross-up event. So the cross-up events are not to be ignored, even if it only gives you 3%. That's decent, and it gave it to you multiple times and also preempted the larger move that occurred later. So if we get this baseline to cross here and they're getting scooped up, they're getting pulled together, gravitated together, and the cloud, the cross-up potential on the 12-hour is suggesting that passive push on the hourly dump right now with the 15 reset and the 4-hour still lingering in wait with the 6-hour support as we make our ascent through the time frames for a change. And this is showing how the 12-hour could take us to the promised land of the upside in 9 hours time. So you'd look for that 3-hour, 6-hour close and then see if that maintains this bullish narrative above 26,589, and then if it can pierce and close above the cloud, that'd be ideal for a long if you're looking for longs. And this would be ideal to close above that level, above the cloud. So you have 3 hours and 6 minutes for that to occur, and then the 12-hour candle close would also have this potential cross-up event. Now it hasn't crossed and it hasn't closed, and we saw with the daily time frame that the crosses overs can be negated if it doesn't close in that state. So you need a candle to close with that cross to be intact for that narrative to play out. So this is just the potential until it happens. It's an if-then statement. Once it gets to a certain level, it will cause the cross to occur, which can give you confidence later if it retraces to a zone that you like, potentially speaking. So if you look at the 22-hour time frame, now we start to expand our vision upwards into the 22-hour time frame, also ambiguously suggesting you could double top or push up for the first top in a upwards momentum. The money flow is in the same position as the RSI, which is a good place to be for. And you're getting the cross up on the leading MACD formula. And if we go to the daily time frame here, we can see that the daily time frame is still getting that. We've had that cross up since May 17th, and then we had a cross down event that got negated by a bullish engulfing, and so now we're still in this. The last thing we had was a cross up that's still confirmed. And if we have on the daily time frame this daily candle closing beneath the baseline here, if this maintains the baseline, then you could see this bullish idea. It's still a spinning top at the moment. It could go anywhere, but it's the potential is there for the baselines if it maintains them. So the base, we're at the 50 level, not overbought, not oversold. The daily time frame is just chilling like a villain in wait for that support of the 22 and 12 and 6. 3-day time frame closed yesterday with a interesting point green candle with a sell-off wick, about half the price sold off, but still kind of bullish. There's a lot of volume that entered there on the 3-day. You have a double bottom event on the Williams. The Williams has reset as well with the money flow beneath the RSI. This is looking very nice in terms of an idea for a long. You like to see the money flow beneath the RSI below 50, and the stochastic low with the Williams having this double bottom potential, which could come up to be a rising sun event. So the 3-day time frame had closed with the green candle, and it's also a bounce off of this cloud structure, which is the bullish idea of a continuation, bouncing off the cloud here, which also coincides with the super trend. So you're still in line with the super trend idea for a bullish narrative. Until this super trend level and the cloud is broken, there is no reason to believe the 3-day will not send you to the upside. So the 3-day support with the daily support and the 22 and the 6, 12 and the 6 could negate this hourly dump and take us into a interesting weekend. We'll see how the weekend fares into the weekly candle close in 2 days time. This weekly candle is going to be an interesting one. You want to see if this this channel, can we close this above this level or not. If we come beneath these and start to make these lower lows on the weekly time frame, if you look at the daily here, if we start to break this weighted moving average that we bounced off of, then we could see a sharp drop down into these 618 pools down below at 23.9 and into this golden pocket region. So similar to what we had back here when we broke beneath a certain level, we spiked down for a 2-3 days bearish. So until we break certain key support levels, it's not necessarily in the cards, but we do have this the weekly candle close should be an interesting one, to say the least. Currently we're above the equilibrium point, attempting to push up to the top of this channel on the daily and weekly descending channel here. How do you get this? Well, you can go to your tools over here. It's your trend line tools and do regression trend. It's 2 clicks to put it there. You can also switch it over to a parallel channel if you want to draw it yourself. Same idea. This will automatically do it and change it accordingly. Alright, so we made our ascent through the time frames, and I like what I'm seeing for the 3-day, daily, and weekly in terms of cloud support here. The cloud is getting quite thicker actually, so you're getting a lot more interest in volume here as we bounced off of that cloud. So is there a large positions that were entered off of that liquidity that was spawned off that 100 billion on the 3-month that we took out here? We took a good chunk of change out of here, so did that spawn some divergence, or are they still hungry for more? The Binance FUD didn't really take you down as much as we thought, and also we went over the idea yesterday of Binance actually buying Bitcoin using their sold off BNB or something like that as an idea. So the daily cloud is starting to curve here in a nice manner. We're just looking at it. This curvature is pretty steady here. It's not really changing so much. So are we seeing this daily cloud? This is kind of a steady angle to it, suggesting that it curves in the coming 15th of June, starting to struggle to come up to here to 27. Is it going to be a how far into the future is it going to be? All right, well, let's go back down into the time frame we were at the beginning with the 15 minute and see what's happening with that really quick. We had a buyback wick on that 15 minute holding the super trend here. We wicked off of that liquidity on the 100x pool, as they like to do. Starting to bounce off the cloud perhaps, or is this a bearish retest to the downside? 15 minute has fully reset here. The Williams could come down some more on the 15 minute time frame. Hourly could get that bounce off the 50 level or come down in full to the cloud here at 26,516. Once again, you'd like to see if you're in a short from up here, you're starting to get the cross down event. So if this fails the base, this moving average here, then you'll start to see this drop suddenly down to the cloud, and you get this cross down event, and it could be a bigger hourly play. So the 4-hour support and this 236 is what you're looking at for now. We got an hourly candle close here just a moment ago, 2 minutes ago, and that reset some of our stochastic down to the 50 level. The money flow is still beneath the RSI here, so you should see some sort of bounce potential at some point. If you had a that 4-hour in 56 minutes. So the 4-hour candle close will be a big one too. Are you going to get this to be negated in some way, shape, or form and hold this 236, or are you going to break down? With what we looked through our ascent through the time frames, the cloud being beneath the price action here, seeing the potential baseline cross on the 12-hour with the 6-hour subtle support, the subtle support of the 6-hour and the 12-hour here with the thinning cloud on the 6-hour. I do think that we will see a upside play based off of those higher time frame subtle support structures. So I think we could see this play out in some way, shape, or form. And that's my story, and I'm sticking to it. We'll see if it plays out. So this 22 also looking to cross up. So you got the baselines beneath the price. It ticks all the boxes of what I like to see for a long, which is these beneath the price, about to cross up and taking that to the upside. So that's, yeah. Despite the hourly play right now, it's just a matter of when does the hourly start to spawn some divergence on the lower time frames, possibly off the bounce of the cloud here on the hourly, because the cloud is also beneath the price here. You are breaking the 236 of the bullish trend base fib, and the 15-minute cloud. So you wait for the 15-minute to come down here, maybe even to the bottom of the Keltner and bounce off the adaptive perhaps, and then you could see that potentially come back. If we do a fib level from this level up to here, that also coincides with that fair value gap, the 618 at 26,515. So perhaps we could see a scalp potential too. If it goes down to that level. Right now it's holding the adaptive with the weighted moving average of the adaptive on the hourly, which is also the 236. So this is your zone. It's all about how you manage your risk and where you think of support structures for your stop loss, or you're in it for the long haul. I'm in it for the long haul, so I suggest that we are going up to a certain pool in the near future. 3 and 6 month external liquidity pools do suggest that we come down to those zones. So if you're just a patient camper, then you could wait for those to possibly occur. But this is where my story is, and I'm sticking to that. All right, ladies and gents, I thank you for coming on into the live. I will catch you on the flip side. So thanks for coming on into the live and sharing your essence of being this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time.